there's fairly high confidence in this. This generally, if it were 43-101, would not be an inferred resource. This would be a measured and indicated. But again, we're not going to go there. It's not a compliant report. It simply is where we at right now. So, anyways, back to the numbers: 20 million tons at 0.5 grams per ton, and 43 million tons, including the east zone. And then there's actually a spot between the main zone and the east zone that we didn't plot because there haven't been any holes there. So there's a lot of opportunity for upside.
All right, welcome back inside our proactive newsroom. And joining me now is Jarad Lazerson. He is the CEO of North Bay Resources. And Jarad, it's good to see you again. How are you?
Doing great.
Good stuff. Well, I know that you have released some news out from the company today, talking about putting out a resource using some historical data. And for those that are familiar with something in Canada, it's a non 43-101. But your company obviously is an American company listed in the U.S., so the rules are just a bit different. So maybe you can explain to us what's going on here.
Sure. Well, it really has to do with this is kind of more of, even though obviously of interest, technically major news, but the 43-101 process and moving to that's going to take some time. We also have to decide whether we're going to do any additional work on the project before we do a compliant resource estimate. But until we say something, we really can't talk about it, which I need to be able to speak to what's going on. Obviously, the M&A market is hot, and we're regularly looking at financing opportunities as well. Just started working with the old auditors, so we're moving towards SEC compliant, which will likely lead to an uplist. So it was just important to get the news out so we can speak to it. It's an internal resource estimate, as you mentioned, non 43-101 compliant, but we've used the same software that would be used. It's just the QA QC from an independent group is the main thing that's obviously missing. So we rely on historical data. We believe the drill logs are accurate. We use the most up-to-date software, Leapfrog 3D plus Edge, which is the resource estimation software. And we're just sticking with just the numbers that are coming out of the block model, which just simply states what the gold is in the main zone and in the east zone. So we split it up where there's high confidence. And this would be with the 43-101, where you'd have the difference between inferred, measured, and indicated. In our case, we're just saying this is the global resource. And again, one of the big reasons, obviously, it's a great release, but it's really nice because now we can talk about it. The disclosure rules are very tight. If I say it to somebody, I need to say it to everybody. So that's one of the main reasons for the release. But yeah, the numbers look just fantastic.
Yeah, tell me about these again non-compliant numbers. What are you putting out?
It's about in the main zone, which is heavily drilled out. That's why we're also able to put this out, and it's not particularly speculative. It's just the companies doing it versus a third party. So 20 million tons in the main zone. And I guess part and parcel to what I was saying is that there's over 100 holes drilled, over 50,000 feet of drilling. So again, there's fairly high confidence in this. This generally, if it were 43-101, would not be an inferred resource. This would be a measured and indicated. But again, we're not going to go there. It's not a compliant report. It simply is where we at right now. So anyways, back to the numbers: 20 million tons at 0.5 grams per ton, and 43 million tons, including the east zone. And then there's actually a spot between the main zone and the east zone that we didn't plot because there haven't been any holes there. So there's a lot of opportunity for upside. So anyways, let me just summarize it for the record: 20 million tons at 0.5 grams per ton, 350, that's about 350,000 ounces, 300,000 ounces, sorry. And then the east main zone plus the east zone, 450,000 ounces. So that's the big number, 450,000 ounces at average grade of 0.3. So a little low on grade, but where gold sits right now, that could potentially be economic. So that's kind of why we use that number. But yeah, total resource about 43 million tons, and growing from there. Like I said, we'll continue to recompile data and make some assumptions, and then turn it over for 43-101.
Are you anticipating any more work being done to feed into that 43-101? Or are you comfortable with where things are at right now and see where the numbers go? I know a lot of this has to do with financing and things like that.
Yeah, I couldn't put it better. So now that we have the data together, there's a couple of additional inputs to do with trenching. which will lay out the surface oxide zone, which is high grade. And then we'll take a look at it and just see kind of finance wise what the appetite is for additional drilling or work there, or whether this should move to a development phase. Again, somewhat financing related, but really strategic. And then we're seeing just a lot of movement in the M&A space. So how this story ends, I can't say, but we're sitting, very good right now. And like I said, it really acts as the best, I don't want to say advertisement, but the best kind of notice to the majors and the finance groups that we're moving ahead. We're serious, and we're taking the price of, where the price of gold at is seriously. We're not sitting back at this point. We're doing the hard work, going back through the old data. And I also just think strategically, even industry-wise, there's a lot of changes going on in the industry, obviously, with a generational shift going on, as with other industries. Warren Buffett retired the other day, right? I know anyways, I won't say anything about that. But the point is that there's a generational shift going on. I think it's hitting the mining industry, new ways of doing business, and really beginning to mitigate the risk. Like I said, M&A, joint ventures, things where, or just the straight buyout. So somebody says you've done good so far, it's really the old model. You've done good, boys. Now here's a check, and we'll take it from here, right? So the industry is getting much more segmented, which is again a return to the old days, because for the last, I would say, 5 to 10 years, it's really the majors have somewhat disappeared, done their own exploration, or worked among themselves for low risk, very advanced projects. But again, with the price of gold, I think you're starting to see both institutional and majors start to look at these more advanced projects. I still don't think they have the appetite for early phase exploration, but a little less than feasibility study now, right? Because feasibility study is largely fully valued, where there's a lot of leverage if you're to get involved in a project like this, which is advanced. There's a good deposit there, but how that story ends in terms of developing a mine needs a significant partner.
Well, good update, Jarad. It's going to continue to be a busy time for the company, and really appreciate your time as well. Thanks very much.
Thanks, Steve.
All right, there's Jarad Lazerson, the CEO of North Bay Resources.